80% of senior executives or the top leadership have a traditional banking background. Do you think that kind of expertise or experience is one of the reasons to make them profitable?
Everyone says that they've made one of two mistakes. Either they had too many bankers and gave them too much power, or they didn't have enough bankers. A good digital bank employs a balance of bankers and non-bankers. There's a lot of subtlety, and I would almost say art, in a good proactive credit risk management strategy. After drug development and aviation, banking is the most regulated industry in the world. First, learn the rules, and then you learn how to break them.
Do you think any traditional banker can go and be successful and build a digital bank or a fintech?
99% of traditional bankers should not try to build a digital bank. You're looking for people with banking experience who are fed up with some aspect of banking and is willing to do what it takes to change that. There was a moment where I had to decide whether I keep my safe career as a corporate lawyer or I do the courageous thing.
Coen, it's a pleasure to have you here. Last year we were at Singapore Fintech Festival, and here we are today. Thanks for taking the time to join me.
Mahmoud, good to be here with you.
Yeah, thank you. It's a pleasure. I wanted to start from exactly, your background as a traditional banker. Given your special background and exposure, I did some research on digital-only banks in terms of profitability, and we found out that Neobank, Revolut, Kakao, Tyme Bank yourself, 80% of their senior executives or the top leadership have a traditional banking background. Do you think that kind of legacy, expertise, or experience is one of the reasons to make them profitable?
Mahmoud, it's an interesting topic because whenever I speak to other founders of digital banks, I find that this is a very lively conversation.
Yeah.
And everyone says that they've made one of two mistakes. Either they had too many bankers and gave them too much power, or they didn't have enough bankers and they made unnecessary mistakes because they reinvented many wheels that had already been invented. Mm-hmm. So I think what we certainly think, looking back on our own history, is that a good digital bank, and I would say a good fintech, particularly in the lending world, employs a balance of bankers and non-bankers and figures out which aspects of the business are better to give to experienced bankers and which aspects of the business are better to give and empower non-bankers to run. I think if you can get that balance right, which, by the way, nobody tells me that they got right. Everyone has made the mistake in the one or the other direction. Yep. But if you can get the balance right, I think that makes for a healthy digital bank.
Which obviously all those banks made, I think, since they became profitable.
Interestingly, if you ask David Velez, who's a shareholder of ours and the founder of Nubank, he will tell you he didn't put enough bankers up front. He was too militant in his view not to have bankers in the early months, and he had to start correcting that very quickly. If you ask me, we had a few too many bankers up front, and we could have gone faster if we had a different balance. So it's not so much whether you make the right call on day one, it's whether you see where your gaps are and you adjust as you go.
Interesting. So let's talk about any kind of traditional capabilities. If you can just give me one traditional capability that fintech founders in particular, they underweight or they underestimate, which we know digital banks, they suffer to be profitable in particular.
Yes, that's an excellent question because I don't think you want bankers everywhere, but there's some jobs you want to give to experienced bankers. Mm-hmm. I would identify two maybe. The one is credit risk management, and particularly portfolio level credit risk management. Because many people naively think that credit risk, you can apply good algorithms and they'll tell you what loans to give and what not to give. Mm-hmm. But there's a lot of subtlety, and I would almost say art, in a good proactive credit risk management strategy. And so I think that's the one area. The other area, I see even big banks get this wrong, is call it regulatory relationships, is the art of managing regulators, the relationship with regulators well, and knowing when to engage them, when not to engage them, how to engage them, and how to build trust with regulators as a stakeholder in your life. I think the one thing about banking, I think after drug development and aviation, banking is the most regulated industry in the world.
Yeah, of course.
And it is what makes innovation in banking so hard.
Yeah.
And therefore getting that regulatory piece right, I think, is a piece that people often underestimate how much effort and hard work needs to go into that.
So if I would like to reflect on your particular journey, Tyme Bank, what was the unfair advantage from being a traditional banker and then went to build a digital bank, and it was really the crack to build what you built today, which is, for me, it's one of the most successful digital banks in the world.
Thank you for saying that about us being successful.
We're
very happy with where we're at.
I'm a huge fan.
We've still got a lot of work to do, but if I look at sort of our path to getting where we are today, I would say one half of it is getting the basics right. And that is where having a background in traditional banking is quite useful, because there's a whole category of things that where you don't have to reinvent the wheel. Bankers already know how to do that. The other half is the innovation piece, is knowing what to change. And there's this idea in art that you first learn the rules and then you learn how to break them. That for me is the yin and yang of innovation.
Yeah.
And where a lot of businesses go wrong, they think they can just rush and break everything. There are different kinds of mistakes in banking and in fintech. There are mistakes that you can make often and there are no dire consequences. There are other mistakes that if you make it once, it can be lethal. And I think experience is what teaches you what kinds of mistakes you can tolerate and what kinds of mistakes you cannot afford to make. And then you can get the yin and yang right. Mm-hmm. You can have the basics solid, and then on top of that, you can make the magic happen.
If I am a traditional banker, does it mean that I can go and build a successful fintech just because I'm a traditional banker and I had that exposure? So do you think any traditional banker can go and be successful and build a digital bank or a fintech?
Mahmoud, I'll tell you straight. 99% of traditional bankers should not try to build a digital bank. They will fail. I think it's a special kind of traditional banker who goes out and builds a completely different kind of bank, a disruptor. And the way I would test it is I would ask the person who says, well, I'm a traditional banker, I want to build a fintech. I'll ask him this question. Are you so frustrated with your current job that you would rather take a risk with all your money and all your reputation to do something different than keep doing what you're doing today? And so what you're looking for is not necessarily traditional bankers. You're looking for people with banking experience who are fed up with some aspect of banking and is willing to do what it takes to change that. Those are the people you're looking for, not the people who are going, I'm a banker and I'm happy to just be a banker for the rest of my life.
Yeah, and exactly that leads to my next question, which is, let's say I am the one who fed up with the current status and I want to start a fintech or let's say a digital bank. Can you give us a 90-day plan to go for it? I fed up. I saw one particular problem. It is massive. We want to solve it. And I decided to go for it. What should I do in my 90-day plan?
I will structure my 90-day plan based on what we know bankers are good at and what we know they are poor at. And I will give you a general view. This is maybe not fair to all bankers.
Yeah.
I would say that generally bankers are reasonably good at the institutional compliance and control aspects of their job. We were all taught in banking how to do risk management, compliance, governance, all of these things. I think what banks generally are not good at is really truly understanding customers.
Yeah.
So when you think about all the apps on your phone and which are the apps you look forward to opening up, I think there are few people in the world who say it's my banking app that I look forward to opening up on my phone. I think most people will say I would rather open up almost every other app before I open up my banking app.
I agree. Totally agree. Yeah.
And so that is what bankers are not good at, in my view. And that is what I would focus a 90-day plan on. The way I would think about it is that you want to immerse yourself in the world of your customer. And this depends a little bit on the solution you're building and your customer that you're building for. But most of us, in my view, are completely disconnected from the reality of the lives of the people we think we want to serve. You think you want to serve somebody who does cross-border trading. Do you actually know what it's like to try and trade, I don't know, flowers from Indonesia to Singapore? What are the pain points? What are the realities of the life of somebody who's trying to do that job?
Yeah.
I think that most bankers think they know, but they don't. And so something I did when we started our business is I took my whole team and we went, and for a week we went and lived in a small village in the mountains of the Eastern Cape in South Africa.
Wow.
And I gave everyone a very small amount of money to live from for the week in physical cash.
Wow.
And I said, let's spend a week living the reality of the customers we think we know how to build products for. And that was a transformational experience. And so I would certainly, at least half the time of the 90 days, I would spend walking in the shoes of my customer.
Yeah.
And then the second half, starting to play with and experiment with and test whether the ideas we have in solving those problems are any good or they're completely useless.
So I need to start a minimum viable product where I can experiment and see if this is something interesting to the customers I want to solve the problem for. Yeah. But the question is, we are highly regulated in financial services. How can we experiment? You need to go and apply for licenses and to go for that. So
100%. This is one of the reasons that innovating in financial services is so hard, is that it's extremely difficult to get anything at any scale off the ground without tremendous cost and time and effort and potentially employing lawyers and compliance people, etc. Which is why those early days can be so powerful. And what I would say is, be creative, create mock-ups, create, clunky prototypes, engage with customers, see how they respond, what they think, etc., etc. Luckily now, with vibe coding and so on, we can play around with it. And even if you play around with funny money, you're not really live in the real world. You can learn a lot in those early days. And sometimes it makes sense to actually leverage off an existing platform. When we built the first version of our business back in 2012, we didn't have money for a banking license. So we convinced an existing bank to allow us to run what today is called a sandbox inside their bank, right? Yeah. And so we found a way to not bet the bank or spend all our savings building something before we figured out whether that's what customers love. Because I think one of the challenges we all have, you're an entrepreneur, so you know this. Like, to be an entrepreneur, you have to have a high level of conviction. You sort of think you're right about something in the world that everyone else is wrong about.
Yeah.
But we tend to sometimes, especially when it comes to the detail, overestimate our ability to predict a customer's needs. And so being out there, testing, learning, if I had to go back, I would spend a lot more time just doing that stuff up front in my first 90 days so that one develops a better nuanced feel for the subtleties of the customer's need.
Which is obviously much easier now with, the vibe coding tools that we have today. I wanted to get your take on technology. So myself, I'm not a tech person. I'm like you. I never written a single code in my life, but I try my best to learn about technology and really put my hands on it without writing code. How important do you think is technology for anyone who wants to start a company rather than just writing the code?
Yeah, that is such a big topic, and it's a challenging one for me because I would say I'm a very curious person. I'm very interested in technology, but I don't have a long attention span to sit and solve problems for a long time, which means that sometimes I can become disconnected from the reality of what it takes at the technology layer to do something.
Yeah.
So the way I've tried to solve the problem is firstly to try and be as curious as I can and spend a lot of time in weekends and on holidays, like reading and trying stuff. I think a lot of the learning journey, especially as we get older, is to remain in some way connected to the reality of technology or the tools that we have, and not start becoming completely abstract in our thinking about what technology can do.
Yeah.
The other thing is I try to surround myself with technologists who really understand the detail that I don't, and I listen to them. You know, I take the time to listen to them. Me and my CTO, he lives in Australia, I live in Singapore. A lot of our teams wake up after us because a lot of our business is more to the west of where we are.
Yeah.
And so early morning over coffee, I'll phone you up and we'll just talk about stuff. And he'll send me little video clips, little demos. He knows as part of his job is to keep educating me so that I don't become too theoretical and idealistic about where the world is at and what we can do.
Yeah.
On the other hand, I'll say one thing. One of my wife's many degrees is she's got a BSc computer science degree.
Yep.
She's also got an MBA and a master's in creative writing. But she says the great blessing in our business is I'm so poor at technology that I don't know what cannot be done. So I'm constantly putting unfair demands on my team.
Yeah.
And that is part of what got us to where we are. I don't think that was a very good answer, but that's the reality.
It is actually. And you remind me of Elon Musk, which, you know, he comes from your country. I'm a big fan, and this is exactly what he does, you know, to push the limits. So talking about technology in the context of banking, can you walk me through your early days when building any kind of digital strategies? Either if you like to go to traditional banking, or even though in building the digital bank, what was the technology itself that you said, oh, that's something interesting, and there is a disruption here that will happen. Let me put my hands on it.
You know, the first days that we really got into this was between 2005 and 2010. We sort of almost forget that there was a time when we didn't have touchscreen phones and we didn't have apps.
Yeah.
Those were the days before that was a commercial product. I think touchscreen phones in South Africa only became sort of commercially viable in about 2012 when people started getting iPhones and so on. And so our first technology was a very, very clunky protocol on old phones called USSD. So if you wanted to use this protocol, you would dial something like *123 #3345, and then it would give you like a drop-down menu that you would choose from.
Yeah.
It's the thing that engineers used on the towers, on the cell phone towers, as their protocols.
Yeah.
But what we realized, even with those very simple drop-down menus, is that what phones did is that it actually put power into the hands of the user. Mm-hmm. And it had the potential to liberate them from physical cash. That if you could get people to use and understand those, and you added to that real-time payments, that people no longer needed to carry physical cash around. So the name of our business, Tyme, is an acronym for Take Your Money Everywhere. And it was the idea that in a country like South Africa that's quite dangerous, carrying cash is dangerous, that you could be liberated from the physical danger of carrying your money in your pocket by using your phone to access money that sits in a bank account or in a wallet. Yeah. And this is actually where Africa has, and places like Bangladesh, for instance, have sort of gotten ahead of the rest of the world in moving people out of the physical cash world and into the digital world.
Let's keep on banking, but I would love to touch base on Tyme Bank. You use data-driven underwriting using point of sales data to build a real-time picture of businesses and offering dynamic working capital loans with a turnover-based repayment, which is so fascinating. Can you just tell me how that changed your business model when you reached such a maturity in doing so? SME is very risky to lend to, not as much as profitable, like other segments. I want to know how that changed your business model, in particular in lending with this.
Mahmoud, thank you for asking the question. I absolutely love that product.
Yeah.
Because I think that it is one of the best illustrations of what we can do with data and a bit of creative thinking in the banking world today.
And solving actual problems,
And
which no one would like to do so.
Exactly.
Yeah.
So let me quickly explain how we do the product. So the way the product works is we partner with anyone who acquires payments. So anyone who does payments, whether it is, think about a physical card machine or instant payments inside a shop or online payments, anywhere where there's a payment flow, where there's data that can show us the turnover of a business, and at the same time, where there is the ability to do a split payment. In other words, to collect cash from an existing flow of a digital payment, we can do this business. And what we basically do is we say to, let's say, a shopkeeper who runs a coffee shop in Cape Town or in Manila, we say, we go to whoever has their point of sale device or their instant payments acquirer, we look at their turnover, and we say to them, we can see what your turnover is, not just what your turnover was last month, but through a whole year, what the seasonality of your payments are. We will lend you an amount of money, and we will charge you not interest. We will charge you a fixed fee on that money. And then we'll deduct a percentage of the turnover of your business over the next 10 months until you've repaid the capital plus the fee. So what we're doing is we're actually taking risk with you on your future cash flows. And it's the opposite of what banks do.
Exactly.
Because this is not usury, it's not interest. What we do is if your business has a slow few months, you pay us more slowly. If you have a great few months, you repay us faster, right? So we are living with you in the cycle of your business. Now, when I first started this business, when I first had the idea of building this business, I read the work of a Peruvian economist by the name of Hernando de Soto.
Okay.
And what Hernando de Soto said is he talked about the mystery of capital. He said, why are Americans rich and Peruvians and Pakistanis and Indonesians are poor? He says the reason is structural. And he said the mystery of capital, he said the biggest problem is what he called the mystery of missing information. He said if we knew as much about somebody who runs a coffee shop in Cape Town or Jakarta as we knew about a teacher in New York, we would be able to lend them money at a very good price. But we don't know because they live in the darkness of physical cash. If we can bring them in the digital world, we can lend them the money. And so what this product has enabled us to do is to give small and micro businesses a lending product, interestingly, that has a net promoter score of over 80. They love it. It's a very good product for us. Our bad loans on that is very low. And what is interesting, it's naturally a Sharia compliant product.
I was to tell you, this is a Sharia compliant product, actually.
It is. So we actually are Sharia certified for this product in South Africa. It just works, but it's dependent on having that data and being able to do that daily deduction of fees from the customer.
Which obviously, if I am an incumbent today, a traditional bank, I would need to do a digital transformation and then a data transformation to have the data to do the underwriting and also connect with all, the third parties and to connect.
Correct. But more importantly, you have to do a cultural transformation.
Of course.
You have to think about this thing differently.
Yeah.
So what we see with traditional banks, when we tell them about this product, you know what they say? That product makes no sense. They say, because if your customer pays slowly, that the effective interest rate are actually lower.
Yeah.
If they pay quickly, the effective interest rate is higher.
Yeah.
And what we say is, well, the customer doesn't care, because what they care about is their stock turn. This is an unsecured working capital loan.
Yeah.
They are happy to pay us. Essentially, if you think about it as interest rate, we don't call it interest, we don't do it as interest rate. But if you think about it as interest, they're actually happy to pay us a higher effective cost of capital because we are taking risk with them. They know that, and I'll give you an example. I was in the call center the other day. We were speaking to a customer who had stopped, they'd stopped doing payments.
Yeah.
And we said to the customer, we see nothing's going on. They said, he said, yes, they've dug up the road in front of my shop. My customers can't get into my shop.
Oh.
And we said, fine, when do you think the roadworks will be done? He said, no, they said it will take a few days. And we said, that's great.
Yeah.
So he doesn't have the stress of having to repay us with money he doesn't have.
Yeah.
And we're happy to take that risk with him.
Yeah. This is really innovating, actually. I'm fascinated with this. And this is actually the mindset and the shift that we have to really embrace in traditional banking, to think like this. So how can I be supportive to my customers instead of just looking at, the profit and how much money I'm going to make? Talking about this particular use case, which obviously it can be done, it's just a matter of a cultural shift here. I would love to know your take on intelligence transformation. So we started doing digital transformations, then with data, with AI. Now we've got Gen AI, and things are going to be so intelligent. Do you think we will see a wave of intelligent transformations? And if you were at, let's say, Commonwealth Bank, like what you were, and Standard Bank in South Africa, how would you address that?
Mahmoud, the first thing I would say, I think we're in the middle of that intelligence transformation already, in the sense that the technology is there.
Yeah.
The rate limiting factor in terms of this intelligence transformation, I like the word, by the way, I'm going to start using it.
Yeah.
The rate limiting factor is not the technology, it's human adoption of the technology. We are the rate limiting factor.
Yeah.
And I think that a lot of what slows that adoption down is applying a set of governance, risk, and decisioning frameworks that are not necessarily appropriate to the new technology.
Yeah.
And so my advice, if I were to speak to colleagues at Standard Bank and Commonwealth Bank of Australia and other more established institutions, is create free spaces. There's something we learned from Nubank. They call it targeted friction. And what they mean by that is you don't have to apply the same mindset in terms of slowing things down everywhere. You can find areas where you can allow things more freedom to go faster, and then other areas that are high risk where you can go slower.
Yeah.
But we need to start creating these free zones in our businesses where people can actually experiment more, grow faster, jump over or ignore a few of the gates that are normally in the interest of accelerating the pace at which they do things. I'll give you an example. When we do software development, from the moment somebody puts their fingers on a key to start doing a change in the system, to that system being in the customer's hands, used to take us months.
Yeah.
We now do it in our business on average in 10 days. And we do hundreds of these a week. There's one team in our business that are purely AI-driven team that does it in under 4 hours. So how do you take a 10-week process from idea to putting something in a customer's hands to a 4-hour process?
Yeah.
The answer is you have to automate the hell out of it. Right? You have to think about it very differently. And so what all of us need to do is find the spaces where we can start proving that that is possible and that can be done safely.
Yeah.
And then we need to start slowly but surely, or maybe not so slowly, actually start turning the whole organization into an organization that thinks like that and works like that. And that is changing the most difficult thing in the world to change, which is the human mind.
Absolutely, yeah. So you mentioned Commonwealth Bank Australia, and I found out that in 2015, they acquired Tyme Bank, and then obviously an exit happened for some reason. I would love to know if you can share more about this, and what did you learn from strategic investors, because obviously it's a strategic investment for some reason. I would love to know what are the lessons you learned from that.
We can talk about that for the whole podcast because there's so many lessons to learn from the interplay, the dance between more traditional institutions and newer institutions. Every institution, like every family, has their own pros and cons.
Yeah.
But the one thing that I've learned is that it's an extremely difficult to put two institutions together that have fundamentally different clock speeds and fundamentally different risk settings.
And cultures.
Yeah. So we have a lot to be grateful for. Commonwealth Bank of Australia has been very good to us as a business.
Yeah.
But if you ask me quite honestly today, I hope they won't be offended if I say this, I'm relieved that we had the opportunity to buy the business back from them and to go on our own, because we would never have been able to go as fast and be as innovative within the confines of that institution as we have been outside. It's sort of understandable. It's a little bit like we are as individuals, is that when you're a certain age, you're able to take a lot more risk with lower consequences.
Yeah.
And as we grow older, we become more risk averse. We play less offense. We play more defense.
Yeah.
And the more we play defense, in a way, the lower our risk is, but also the lower our returns become.
Yeah.
In terms of how fast we can move from where we are now. Yeah. And I think that this is a natural phenomenon. And so the way I think about the Tyme business, and if I take GoTyme business in the Philippines, we've now got, call it 8 million customers in that business. We're 3 years old. That business is a toddler, right? And it can still, in some ways, take the kinds of chances that you can take when you're a toddler. That statement should not be overinterpreted because you're still a bank. You're a toddler bank.
Yeah.
Right? But I think that when partnering, whether it is strategic investors or even business partners doing projects together and so on, this question of finding, I would say the job is to find partners that are the right speed.
Yeah.
My brothers, when my brother talks about his friends, his greatest compliment is to say, that guy is my speed. You have to find institutional investors and partners that are your speed.
Yeah, which you obviously found with the Neo Bank.
Yes, indeed.
Yeah. So I would love to close this chapter of talking about banking and stuff. If you have to be very extreme on the status of banking in 20 years from now, how would you describe that?
20 years is such a long time in the world in which we live now. So I'll start by anchoring this on what I think will be the same in 20 years. I think Jeff Bezos said that, you have to figure out what changes in life, but you also have to figure out what stays the same.
Yeah.
And I think the thing that stays the same in 20 years is trust, is the need for trust at the center of the banking system.
Yeah.
And I do think that the link between brand and trust will continue to be important.
Okay.
So the question is, as in our own lives, who do I trust? I think that question will still be true. Who do I trust? Who do I trust to keep my identity safe, to keep my money safe, to keep my digital assets safe, to keep my investments safe? And I think here is where banks do have an opportunity to continue to be very relevant.
Yeah.
What changes? I think everything else changes. The form factor. In other words, whether you even need an app or not. How embedded banking is into experiences.
Yeah.
How much of your banking you do or your agent does for you. I think all bets are off.
Yeah.
I can see a world where I get into my car and I just have a chat with my car about my banking on the way to work. By the way, I'm not driving my car now. I'm just sitting, having a chat with my car about what banking transactions the car has to do for me today. And the car will remind me of the ones I've forgotten, like, paying my mother's medical bill because it's picked up on my email.
Yeah.
I think that's not a ridiculously futuristic world. I think that world will be with us in the next 20 years. I'm not going into an app. I have actually, the form factor of banking has changed completely. I gave an example to some people earlier today. We're already at a point, and we see players doing this with success, where I'm on my ride-hailing app, I need to go somewhere, I don't have enough money to go there. In that moment, my bank notices I need a bit of money to pay for that trip, offers me a small nano loan.
Yeah.
I say, yes, thank you. My ride is paid right away. I finish my ride and I repay that ride when I'm ready to repay it. So I'm borrowing money from my bank the way you'd borrow money from a friend.
Yeah.
In the moment that you need it.
Yeah.
And the bank already knows you need it. You don't even have the embarrassing moment of asking your friend whether you can borrow some money to take that trip.
Very interesting. And that's the open finance play here, or open banking.
Great. Open banking, what I would also describe as embedded and contextual banking, where I don't think as banking as somewhere I need to go to deal with my financial needs.
Yeah.
The bank just shows up in the moment of need,
Exactly,
in whatever channel I'm already operating in.
Yeah. Interesting. I want to move to a topic that is very close to my heart. For me, the job of a founder is to do two things: to build the best product possible and to sell it. You sell it to customers, and also you need to sell the vision to employees and investors. How do you find sales for for entrepreneurs in general, or sales in general for anyone? What's your take on that?
I would say that sales is the most honorable, humble profession, that if you're not willing to be in, you shouldn't be an entrepreneur.
Yes, I totally agree.
I think that often we think about sales completely wrong.
Yeah, I think there is a misconception about sales and salespeople, and that build like a narrative or a brand on those people, and that's why a lot of people, they just get afraid to go to this because they don't know how to sell, or they're afraid to sell.
That's right. And I think that there are a number of unfair misconceptions about sales. I think there's also a lot of fear.
Yeah.
Because our egos are tied up in whether we are rejected or accepted.
Yeah.
And if we're in a world where we often get rejected, that is hard. And then people go, well, that's not for me. Like, sales are for other kinds of people, but it's not for me.
Yeah.
The way we think about it in our business is that sales is truly an art. And you can only be a good salesperson if you're a truly humble person. If you don't think you are so important that you are above rejection, you don't think you're always right, and you're willing to do the hard work every day, including absorbing rejection from people who don't agree with you or don't buy what you are selling.
Yeah.
One of my co-founders, founding team members, Tariq Karan, he said something to me one day that was like a light bulb moment for me. He said to me, we speak this business into existence. So even before you have a product, you are selling.
Exactly.
You are selling the idea of building the product.
Yeah.
Right?
Yeah.
and you are selling to most importantly, to your friends and your colleagues who you want to join you in the quest, right? You're selling that venture. You're selling to capital allocators who you want to allocate capital to it. Even if you don't think you're selling, you're already selling.
Yeah.
Right?
That's the point.
And you go over time from selling ideas to few people to selling products to many people, if you're in our business, which is a B2C business. But all the way through, you're selling.
Do you remember your first customer at Tyme Bank?
Yes.
Yeah, tell us about this.
His name was Bongani Maponya.
Okay. Yeah.
He was an accountant who worked in our account department, and we had to get the first person to open the account and use the product. But this was when the bank was still in beta, and there was considerable personal risk because in order to become the first customer, you'd have to be quite brave because we're sending you out there with an account and a debit card that nobody knows, and you have to go and buy things, and half the time it's not going to work.
Yeah.
So our first customer, in a sense, also had to be a salesman.
Yeah.
Because he had to go up to people and say, can I swipe this card here? It's a new bank. I'm not sure it will work.
Yeah.
And then they might say to him, yeah, just get out of my shop. I don't have time to play for people who are testing things. But what was interesting with our customer number one, and we still call him customer number one, he's still in the business. He actually now runs sales and distribution for us in South Africa.
Wow.
He's actually now a very senior guy.
Wow.
But we picked him because we knew he had courage and he had passion. And as I say, he was just an accountant at the time.
That's really fascinating to do, and hats off on this. Can you tell me the difference between selling to customers in South Africa? Obviously, you're in South Africa and the Philippines, two completely different geographic locations, but somehow you are selling the same product, maybe built on the same tech stack. But sales here is very key on, in the spectrum. I want to know how different is between the two markets and how we are selling to those audiences.
Mahmoud, the first thing I would say, what we're learning and we're seeing it in our data, people all over the world are a lot more similar than we think.
Yeah.
Human needs, once you sit down with somebody like you and I sitting down now, you have a conversation, we are often surprised at how similar we are.
Yeah.
And I think at a fundamental level, what we're saying is that people are not that different. However, there are all sorts of interesting and subtle differences in styles and aesthetic preferences, maybe in what gets people's attention, what people get excited about. If you look at loyalty, what kinds of things do you put in loyalty that, people want to buy, et cetera, et cetera. There are lots of subtleties in that. But I don't think those go to the fundamentals. Those just go to the nuances of execution. As an example, when we went into the Philippines the first time, people said to us, all the apps in the Philippines were very busy because a lot of them came from China and were built by Chinese companies.
Yeah.
So you'd open an app and you wouldn't know where to look. This thing was just like, letters and numbers everywhere. And we said, we're just going to use exactly what we did in South Africa, very clean, very simple, very empowering in that you can immediately see what's going on your screen. And initially, the local team said to us, Filipinos are not like that. They're not going to like this. Turns out they love it. We're the fastest growing bank in the country, the highest net promoter score by a long shot.
Yeah.
The highest app rating. That sort of is one of the proof points I would put forward to say I think humans are more the same than we think.
Yeah.
But at the same time, being quite respectful of all those other subtleties is as important.
So tell me about a mistake that you would repeat in sales many times the minute you remember it.
You're asking me to answer painful questions.
Because it's sales.
I have to now think about all my sales mistakes I've made.
Yeah.
One of the things that we've learned the hard way is that when you sell to something, you mustn't sell to somebody having in mind the way you see them, but having in mind the way they see themselves. And what I mean by this is when we started in South Africa, we built a really low-cost bank that was affordable for poor people. And the way we sold to people was to appeal to a poor person. But nobody thinks of themselves as a poor person. People think of themselves in an aspirational way. They're on their way, they're doing something with their life, and they aspire to a better life. So when we relaunched our brand in the Philippines, we had a completely different brand positioning. We positioned the brand as a very aspirational brand. And we didn't have an underlying mindset of saying, when I'm selling to you, I'm doing you a favor because I'm giving you something, because nobody else is giving you something. We had a mindset which said, I really, really respect you for what you are going to become with and do with your life.
Yeah.
And therefore, I am going to sell you something that I think of as aspirational and that you can think of as aspirational. For me, that goes to a lesson I learned time and time again selling, which is the starting point of a successful sale is compassion and respect for the person you're selling to.
I totally agree on this. And yesterday, actually, I had a chat with someone, and he asked me what would be the most important sales skill should the salesperson has, and I told him, you just need to listen.
Yes.
Yes, that's it. It's very easy. You listen, you know how to sell. The minute you talk, the minute you pretend that you know, and you what you were mentioning in the Philippines, exactly the scenario. You are humble with them. You put yourself in their shoes, and you just listen to what they need, and it's done. It's done for you. So it's very simple and easy. Just people complicate it.
This thing you say about listening, for me is so powerful. The thing about listening is a gift. And listening requires that we are fully present in the moment, in the conversation.
Yeah.
It requires us to be, in a way, generous at heart, because we're putting aside what we want to say.
Yeah.
We're putting aside what we want out of the conversation, and we're bringing our full attention to the needs of the person.
Yeah.
And the amazing thing is, as you say, then suddenly life begins to flow, because we no longer like talking at each other. We're actually connecting, and we actually have this opportunity to change the next moment of our lives.
Yeah.
Because we are listening, because we are fully present in the moment.
Yeah. Yeah, very interesting. I couldn't agree more on this. So I knew how to build. I learned how to sell. Now I need to scale. And for me, the scale is about talent, which personally I did a lot of mistakes in this. Talent is very important. I call it the multiplier. And to this, you come from a country which I believe it's full of amazing talents. South Africa, for me, is full of amazing talents. How do you see the differences in the human being in different geographic locations, and how their talent is correlated with where they come from?
This is such an interesting topic because, of course, we're all individuals and one should never generalize on these things. But I could say that people from different parts of the world, depending on their education and their experience, have different strengths.
Yeah.
If I look at South Africans, I would say South Africans are extremely adaptable, generally are quite culturally fluid. They can get along with different people from different backgrounds, because South Africa is such a melting pot of different cultures and backgrounds and so on, and very robust. You can be quite straight with the South African, I would say, we're incredibly lucky to have a big tech shop in Ho Chi Minh City. We employ over 700 engineers and developers in Ho Chi Minh City. And I would say the strength of Vietnamese, they are fantastic team players. They work extremely well in teams. also flexible, super hardworking. But you need to work a bit harder to get a Vietnamese to tell you what they really think, you know? And therefore you have to sort of lean into the conversation and make sure that people understand that this is a safe space where I'm not pretending to want to know what you think. I actually want to know what you think, you know?
Yeah.
And then if I, go to the Philippines again, I would say, in my experience, Filipinos are incredibly compassionate people, incredibly empathetic people, very in tune or attuned to the emotional nuances of the conversation, right? And that is an incredible strength. But also a little bit of the same thing is you don't have to tell me what I want to hear because I'm the founder of the business.
Yeah.
I actually need you to tell me what you really think.
Yeah.
And that requires a bit more hard work. So I think that there are these nuances, but something that I always want to remind myself of is everyone is an individual. And so you can find a Filipino that is very straightforward and you can find a South African that is very empathetic. And you must never think that you know somebody just because you know where they come from. And so I think for us, one of the big things that we put emphasis on in our world, to come back to your point about talent, and I agree with your statement, scaling is about talent. It's about finding the best people, working with the best people. One of the things we try to do is we try to build like a truly global culture where if you're a kind of person who wants to be on an adventure and who's open-minded and who's not so tribal that you can't get along with people from other tribes, that you can feel at home in our business, no matter what your religion or your cultural background or your upbringing is. You can be enough of yourself in the workplace to have fun and feel safe and feel that you can grow in our environment.
So tell me about a hiring mistake that you did, especially in the early days of Tyme. We make mistakes when we hire people, and I think it's one of the biggest mistakes we do in the early days. So I want to know.
The two kinds of mistakes, if I look back now, that I feel that I often made. The one is to hire people on CV because on paper they look like they've got what I need, even though I frankly don't particularly like the person I'm hiring. I don't have a feeling that they're my kind of person, but I still hire them because their CV looks good. And then the second is hiring people who are all about themselves. I think something that we've learned in our business, that if you want to grow a business with that has a very strong purpose and that wants to achieve things against the odds, you need people who are, they're team players and they're selfless. Their intent is primarily to make a contribution, and they get their joy out of the contribution they're making. They're not constantly obsessed about what they're getting out of it. We are all of mixed intent. We all give and get. So I'm not saying I'm not suggesting the job here is to hire angels, perfect people. Yes, people need things. They also want to get acknowledgement, a good salary, and all so on. But that primary focus on contributing, on being a team player, on wanting to see the business succeed, I think that the biggest mistakes I've made was to allow people into the business who are primarily takers and not givers.
Interesting. Assuming I started a business, when do I know that I need to hire? What is the moment that you say, yeah, it's the moment to hire people?
I wish I could come up with an elegant answer to that question, but me and my co-founder fight about this all the time. My theory is always I want to hire slightly ahead of my need. My co-founder's view is he always wants to hire behind, like he wants hiring to lag the business's need. But he's very cheap and he is very good at bootstrapping.
Yeah.
I prefer to raise more capital
and go faster.
And go faster.
Yeah.
I don't think there's a simple answer. The one thing I would say, never hire off a theoretical organogram because you think you need people.
Yeah.
You have to also always hire when you have a very clear understanding of what it is that you need, and when somebody is doing at least two people's work. Don't hire for half a job.
Yeah.
But as I say, I wish I could come up with, I would have written a book if I could solve this one. I wish I could come up with a simple answer on it. I think over the years, I think my co-founder, whose name is Chart, I think Chart has convinced me that he's probably a bit more right than I am. That it's a good instinct to allow yourself and your colleagues and your system to be under a bit more strain before you bring in the next person.
On this, I need to give me 3 cultural behaviors you would reward and one behavior that you are not a fan at all.
The one thing I've fired most people over is people who create unnecessary conflict in the business, either through selfishness or through having vendettas or unnecessary conflict with their colleagues.
Okay.
And people would talk about somebody who's not a cultural fit. But I would say that particularly somebody who behaves in a way that is selfish or self-righteous or arrogant, for me, that is my pet hate in a colleague. What kinds of behavior do we really reward? People who go beyond their own area of expertise or their own job description to make a contribution, who's willing to take on more, who's willing to, in a sense, take more personal career risk, I would say is something we award. Somebody who's adventurous, who's willing to get on a plane and go to a different country or take on a job that they don't yet know what to do. We really like, awarding that. And then the third thing, and this is a tricky one because it's easy to say, not so easy to do, is people who speak up and, have the hard conversation when we all have a blind spot or the rest of us aren't willing to see something. I do find that sometimes in the moment when somebody does that, internally I don't have the best of responses. And I've learned to log that internal negative response to say, you are resisting what this person is saying.
Yeah.
Maybe they're seeing something that you're not seeing. So that people who are willing to essentially expose the truth or speak the truth, particularly when it's a little bit hard and it's a minority view, I think it's a fantastic thing to have in a business. And it's something that we must, even though it's not that easy, but we must actively teach ourselves to encourage.
Interesting. That's really interesting. So the punchline, I have a last question. Two questions, actually. So one is related to Tyme Bank. So for me, I'm a big believer that we will see geographic players, say Neobank in the Americas, Revolut, Monzo in Europe, Tyme Bank in emerging markets in the South. Do you agree with this statement? And how our regulations will evolve if we happen to see this, which means we will have global, regional, or let's say global geographical digital banks in the world?
Yeah. I think it's a very topical question. I think we're all grappling with this question about how multi-country, multi-regional can a retail bank become.
Yeah.
If you think about banking, it's the biggest profit pool. Retail banking is the biggest profit pool in the world. We've never seen it that way because it's always been such a fragmented profit pool. Lots of domestic players, and in every market, at least 4 or 5 players that cut the cake between them. But it's a massive profit pool. And one of the questions we are asking is, will technology plus increasing standardization of regulations lead to a world where we won't have a winner-takes-all market, but maybe a winners-take-most market? And the bank that is the furthest along the line of becoming a truly global bank today is Revolut.
Yeah.
Right? They are going into a dozen countries at the same time now. They're already in more than 50 countries. I've lost count. Maybe they're in 70 or 80 now.
Yeah.
And they have a very interesting view. They don't customize. Famously, their founder said in response to a question, so what do you do with country customizations? He said, we ignore it.
We do everything the same everywhere we go.
That's it. It's a completely... So that's the one end of the spectrum. The other end of the spectrum is people who are saying the winners will ultimately be domestic players. In other words, the best digital bank in a market will be a bank that only focuses on that market. I think I'm in the same space as you, which I think that the answer is somewhere in between. I think there are some significant benefits to being a multi-country player, particularly economies of scope, economies of scale that come in if you're a multi-country player. So I do think that there's a good argument in favor of being a multi-country player. I don't yet see a good argument for being a global player, because I think over time, the way to escape commoditization in banking is to have a really customer-focused solution. And so as much as I respect Revolut's approach and the uncompromising nature of it, I think Revolut will leave very big chunks of customers, either very thinly served or completely unserved by their strategy.
Interesting.
So I think it's going to be interesting to see how the trade-off happens. But I'll make one more point, is I think that one of the biggest reasons why multi-country is the way to go is talent density. Banking has become so complex. If you take one thing, financial crime, just to attract enough smart people to do financial crime well, which you have to keep your customers safe, is a big job. And it's extremely difficult to find enough smart, talented, well-educated, experienced people in one emerging market to make that happen.
Yeah. Last question. It's not from me. I'll play the video here.
Coen, you and I have spoken a lot about serendipity, coincidence. You keep insisting that it's not serendipitous, it's all being shaped. And can you believe it? I'm at dinner this evening, and guess who my dinner colleague is? The person you're on a podcast with the following day. And we get into the conversation, and the suggestion is, what would be a great talking point with Coen? So here it is. We have a common history. That history belongs to a person called Nick Benadell, and he has a lovely question. He says, think of places or circumstances you've arrived, a moment, a geography, an instance in time, where you get to decide A or B. Coincidence, circumstance, serendipity gets you to that place, that moment, but you decide A or B. And my question to you is, what are the three big A or B moments in your life?
What a lovely question. So the person asking the question is one of the co-authors of a book. The book is called It's About Time.
Yeah.
And he is a business school professor. He's a business school professor at the Gordon Institute of Business Science in South Africa, where I did my MBA.
Yeah.
He asked this interesting question about those points where your life forks into one or the other direction. I'll give you two. The one is, I was in my early 30s. I was managing partner of the leading law firm in South Africa. I was earning a lot of money. I had a lot of status, but I developed this real interest in this topic of digital banking and financial inclusion. And there was a moment where I had to decide whether I keep my safe career as a corporate lawyer or I do the courageous thing and I go out without another job and veer into this career, like this new territory.
It is.
And I am very grateful. I'm not sure exactly what combination of things led me to make the more courageous choice. But I do know one thing, that is today I'm a much happier person because I was a bit more courageous than I would have been if I just stuck to my high-paying job. And the one thing I would say to people, if you have something in your heart, you want to do something that you know is the thing that you need to do in the world, just go out there and do it. I'll give you another example, which is not me, but my wife. When we sold our business the first time to Commonwealth Bank of Australia in 2015, one of the founders had to move, the deal was one of the founders had to move from South Africa to Hong Kong to help the expansion of the digital business into Southeast Asia. And I really wanted to be that person. And I phoned my wife. Her name is Kerry. And I said, Kerry, we have an opportunity to move to Hong Kong. What do you think? And she said, yes. So I said, you mean you'll consider it? She said, no. I say, yes, we can move to Hong Kong. She had never been to Hong Kong. But her courage in that moment to go from a lifetime in one country to moving continents to a totally different place with little children was one of those courageous moments that is like a fork in the road for the whole family and for my career. I think that Adrian is right. What he insinuates is that, these things do not happen by coincidence. We have agency in our lives. And it's only by remembering that we have agency that we can live more fulfilled lives.
And I totally agree, and I'm like you. Thanks again for taking the time and joining me.